Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate filings so you don't have to. Today, we're diving into Essential Utilities' latest 10K. It's packed with info, including a juicy little risk assessment that hints at potential terrorist events. More on that later. First, let's get to the essence of Essential Utilities. They're not your average tech firm, they're in the business of providing basic services. They are a holding company that operates regulated utilities for water, wastewater, and natural gas, serving about 5.5 million people across multiple states, operating under the Aqua and Peoples brands. So think water flowing and gas burning safely inside your home. For the year, they're reporting on how they did up to the end of 2024. This filing is basically their annual report card. One interesting move is the recent sale of their West Virginia natural gas assets. Essential Utilities received about $40 million for that sale, then $1.2 million later. They're using the money from sales to invest in capital expenditures, which in turn improve reliability and utility services and acquire new businesses in states where they already have a strong presence, which is a great, focused move. It seems they want to stick to their core business. They also sold their interest in microgrid projects for $165 million. Pennsylvania is their biggest revenue source, accounting for about 32% of their total operating revenue, nearly one-third of all revenue. Most of the rest is fairly diversified through Ohio, Texas, Illinois, and North Carolina. Over the past few years, they've been consistently growing their customer base, with a big jump in 2020 largely due to an acquisition. The goal here is pretty clear: more customers, more revenue. One thing that keeps coming up is acquisitions, acquiring smaller, often government-owned water and wastewater systems. Essential argues that there are a lot of benefits for smaller systems to be acquired, as they mention. They include access to better financing and improved compliance with all the rules and red tape. Essential believes the greatest challenge facing the United States is the rehabilitation of our nation's aging infrastructure, and they plan to invest heavily over the next few years. Specifically, they plan to drop about $7.8 billion from 2025 through 2029, upgrading their systems and trying to keep pace with those ever-changing regulatory requirements. Now, how do they keep the water flowing? Their water comes from various sources: surface water, underground aquifers, and even other water suppliers. They're always working on system improvements, planning for population growth, consumption patterns, and regulatory changes. For natural gas, they buy from all over and transport the gas supplies through different pipelines. Luckily for them, in the states they operate, they can adjust the amount customers pay for gas to account for any fluctuations in prices. Here's where things get a little more complex. Essential Utilities is heavily regulated, so there are plenty of governmental bodies that oversee their operations. To manage this, Essential Utilities has what they call a rate case management capability, which basically means they make sure their rates are high enough to cover all their costs. They can even add surcharges to customers' bills to make sure they're not losing money in the meantime. Revenue surcharges can only go so far, usually up to 5% to 12.75% depending on the state. They've also got programs in place to replace old, leaky pipes, which also reduces methane emissions that occur in aged pipes. Of course, their rates and revenues depend on people actually using their services. So if gas prices are too high, customers might conserve energy or seek other energy sources. They compete on providing good service and being efficient. One interesting thing is how they get paid for acquisitions. Some states allow them to charge customers rates based on the fair market value of the acquired systems rather than the original cost. This sounds good for Essential, but not necessarily for customers, because the rates may increase more as the customers of the acquired utility are now paying to give Essential what the state decided is fair market value. They try to separate the volume of water and gas sold from their ability to recover their costs, called revenue stability mechanisms, which allow them to make up revenue in certain cases. If they really wanted to, some local governments could even acquire Essential's operations through eminent domain. This forces Essential to acquire more businesses to offset potential loss. They do what they can to make it not happen, or sell systems only when it makes strategic sense. They have to play nice with the environment too, complying with a lot of different regulations. One thing they will have to do is invest approximately $104 million of capital expenditures to address outstanding environmental compliance issues in their water and wastewater systems. But beyond that, a biggest spend is on upgrades to comply with PFAS chemicals requirements in their water, which will cost them at least $450 million to fix. Of course, they have the possibility of being held liable by CERCLA. If they were, that would not be good for the company. This part is really hard to evaluate, and they said so themselves. Still, Essential Utilities is part of a big lawsuit to try and hold the polluters accountable. This is basically the plan: sue companies so they are forced to pay instead of the customers. It never ends. There's also a lot of compliance involved with natural gas transmission. It has plans and integrity programs in place to maintain the safe storage and delivery of natural gas. The company's management recognizes the importance of environmental sustainability initiatives. For example, they're committed to reducing their greenhouse gas emissions by 60% by 2035. Alright, let's switch gears to the human side of things. As of the end of 2024, they employed 3,291 full-time people with 1,664 in labor unions. They seem dedicated to keeping their people safe, training them well, and also to diversity and inclusion. It looks like people are happy to work there, as their voluntary attrition rate is really low. The board of directors plays a critical role, conducting town halls and engagement surveys with the employees. That's great. If you want even more details, you can always check out their SEC filings yourself, and that link is on the SEC's website. Now let's get to the exciting part: potential problems for the company. We are going to talk about risks from government regulations, severe weather, and also a rare circumstance of mains becoming underutilized. One of the biggest risks is regulation because of rate increases. If Essential Utilities can't get approval for higher rates, their profits could suffer. The company mentions fair market value can help recover costs. Another major risk is natural gas supply. If they can't get enough natural gas to meet demand, they might lose customers, and that could have an adverse effect on their results. One risk I found particularly interesting is the possibility of a terrorist attack. Essential Utilities is really at risk, as any damage to their facilities, and specifically natural gas pipe facilities, would be catastrophic. In this day and age, it would not be a modern company without cybersecurity risks. They rely heavily on their information technology systems, and a disruption could cause a number of problems. There are many kinds of environmental laws they face, but this company appears to handle it with the correct oversight and planning. One big one here is that they're estimating to invest at least $450 million of capital expenditures over the compliance period in order to comply with updated drinking water standards, and estimates $210,000 over the next 5 years for lead and galvanized service line replacement. They depend on their management team, and that's a risk. An increase in natural gas prices may affect the amount of natural gas we are required to purchase and the timing of such purchases, and, in turn, affect our borrowing requirements and liquidity position. In order to try and mitigate the fluctuations in natural gas prices, they use purchased gas adjustment clauses, which require review by the state regulatory commissions, as well as gas purchase agreements. One accounting risk is the carrying value of their goodwill. If that impairment decreases, it could greatly affect their net worth. This appears to result from the many acquisitions that Essential Utilities performs. Lastly, investors care a lot more about environmental, social, and governance practices. If Essential fails in meeting such standards, the stock price may be affected. Let's shift gears to the financials. From the balance sheets, their aggregate long-term and short-term debt is $7,745,638,000. It should be noted that the company has paid dividends consecutively for 80 years. On July 31, 2024, their board of directors authorized an increase of 6.0% in the September 3, 2024 quarterly dividend over the dividend Essential Utilities paid in the previous quarter. This is the 34th dividend increase in the past 33 years and the 26th consecutive year that they have increased their dividend in excess of 5%. This is a good sign to shareholders. Let's quickly look at their segments: the regulated water segment and regulated natural gas segment. Net income for their water segment was $350,305, a good chunk of the total net income. They are required to do a lot of integrity tests on pipeline in high-consequence areas. This helps maintain the integrity of the pipeline. The expense can be significant. Now let's talk about the government. Remember those changes to federal and state tax policies? They can have a pretty big impact. Income tax benefit for 2024, a benefit of 3.8%. Scroll roll of management.